So landlord's insurance is basically peace of mind for an owner or investor that currently has a rental property. It basically ensures that if any damages or loss of rent is to occur at the property, that they are able to have that covered by an insurer.
The difference between the two is obviously building insurance covers the structure of the property, including walls, ceilings, like your cupboards, that sort of thing, glass windows, and then the landlord's insurance side of things will cover the fixtures, so your floorboards, your carpet, and also your blinds. So there is quite a difference, and obviously you want to have both covered. Unfortunately, there is times where things do go pear-shaped, regardless of how good you thought the tenant was. Unfortunately, recent circumstances for myself as a property manager, one of my tenants decided to flee the country. He stopped paying rent, left the place pretty much trashed, I suppose you could say. Cigarette burns in the carpets, damage to the walls, so on and so forth. So basically my landlord didn't have insurance. He was out of pocket of approximately $5,000 simply because there was no rent paid for the last 2 months of the tenancy. His bond obviously covered a small portion of it, but the landlord's insurance would have been great because it would have covered the removalist costs, the cleaning, the repairs, and so on and so forth. But unfortunately, as my landlord didn't, $5,000, it's not ideal.
So a situation where landlord's insurance has helped one of our owners in the past is where we did have a tenant that basically looked great on paper, did all the relevant checks that you would normally do as a property manager, and they looked like they would be a fantastic potential tenant, so we put them in the property and they signed on for a 12-month lease. Unfortunately, 3 months into them actually starting their lease term, they stopped paying rent. So then that obviously followed with a 14-day notice to vacate because obviously their rent wasn't paid up to date. And then after that, we then decided to go through and conduct our 3-month routine inspection, which is obviously normal practice for a property manager. After going out to the property, we realised that we weren't able to get through into the door. So we then decided to go to VCAT, execute to have a possession order put in place, where the police actually did then execute a warrant so that we could get into the property. Once inside the property, it was absolute turmoil. We had no idea what we had walked into. There was rubbish everywhere, clothes, the bathroom was filthy. I can't even describe how, as you can see from the photos, disgusting. Looked like it had never been cleaned since he'd moved in there, and of course it was pretty much a brand new apartment when he moved in. The balcony was littered in cigarette butts, and obviously from that point we realised that we had a pretty serious case on our hands. So after sort of walking around the apartment, we realised that there was a lot of furniture and goods that were still in the property. So then that meant that we then had to not only get the locks changed, because obviously he still had the keys to those locks, but also get Consumer Affairs out to conduct a goods inspection, which means that they have to basically take note of all the items in the property, and if there is any personal items, so passports, identification, personal documentation, the tenant or the resident does have 90 days to actually collect that material until it's disposed of. So we did have to obviously organise storage for all of those items, and then once we did that, we obviously went back to VCAT so that we could have an order put in place so that we could get the bond back for the owner. So the bond, was only roughly about $2,000 at the most, and the total amount, including cleaning, the goods inspection, storage of the goods, and rent loss for the owner, after putting through the insurance claim, they actually received $10,000 back. So it's a pretty good example, over $300 peace of mind per year, that's tax deductible, of how important it is to have in place.
So if you make a claim and you receive insurance proceeds, that's usually assessable in the year that you receive it, and you can also claim deductions for the expenses for repairs that you make in some circumstances. So that depends on whether it's a genuine repair, which means returning to its original functionality, or whether you're actually replacing the asset or improving it. And it also depends on the use of the rental property. So if you've rented out the property immediately before the damage happened, and also immediately after, and how long the vacancy period was for, that's all going to affect whether the repairs are deductible immediately, or if they're added to the cost base, and that's going to reduce your capital gain when you sell the property, or whether they're just not deductible at all. So landlord insurance premiums are deductible generally in your tax return, along with your other rental property expenses like rates and body corporate and interest, etc. Whether it's a genuine repair, just returning to its original functionality, or if you're improving the assets, such as completely redoing a kitchen, a brand new kitchen, that would be an improvement, not a repair necessarily, so that would be deducted over a period of time, not in that year straight away. They can usually continue to be deducted during that vacancy period, depending on the same factors. So if the property was rented out immediately before the damage and immediately after, or at least available for rent, and also how long the vacancy period is for. So generally you can continue to deduct the holding costs.
So the property managers at the Hopkins Group, we first and foremost check all of the applications initially before the tenants enter the property to make sure that we don't have these issues occur in the future. So that would be checking rental applications for previous rental history, also their current employer, just making sure that obviously they can make the payments of the rent. We also do constant arrears, so we have a daily run sheet of who's in arrears, and we follow them up. Obviously send notices where we need to vacate if they're in a certain amount of days in arrears, and just chasing them daily. We also do 3 monthly inspections, so we go through and make sure they're obviously maintaining the property and keeping it in a nice and clean manner.
So the best way to check if you are protected is definitely to speak with your property manager first and foremost, to see if they have a current policy in place for you. If you are a homeowner though, and you have your own contents insurance, home and contents insurance, there is a possibility that they may be able to take out landlord's insurance for your investment property as well under that same provider. Alternatively, you can come into the Hopkins Group. We're obviously happy to sit down and have a chat with you about our recommended insurance provider. We have pushed through and done quite a few claims through that provider, and we do highly recommend them. So, I mean, for a low cost of $300 annually, which again is also tax deductible, it's a small price to pay for a large peace of mind.